Chairman. You're both very welcome, gentlemen. I just want to return to a question that Senator Darcy asked you earlier on, Mr. Dobie. He asked if you were satisfied that you had access to accurate information which enabled you to discern the full financial position of the group at all times in relation to AIB. And I think you said that you were satisfied.
I was.
Okay.
I mean, there was a very open dialogue between ourselves and AIB at all times, and they were very open providing us with information.
And you came into auditing AIB in around, is it 2002?
Yes. There was a competitive tender, and we won that competitive tender in 2002.
Okay. If we could just look at a board minute, and it's in the document on page 4 of the KPMG core document. It's a board minute from December 2001. If you have it in front of you, the page is mostly redacted, but at the top we have the Group Chief Executive's report, and in that main paragraph, Mr. Buckley talks at the bottom of the paragraph about the need to make a significant capital investment in the development of a single information management architecture. So would you have come across this problem when you were then auditing in 2002, the year 2001?
Yeah, AIB had a lot of legacy systems, and there was a lot of workarounds required to gather information, but it had those workarounds in place. There was a very extensive program put in place between 2002 and 2007, particularly in relation to the ROI division called Project Alpha, and that was designed to facilitate better information flows, and particularly in relation to customer information, and would have also facilitated things like credit provisioning. But AIB had a lot of manual processes. This was a suggestion that there needed to be more better systems and more systemised processes. There was also a very active dialogue in AIB. Well, so this predated the Rusnak fraud, which was before our time. But post-Rusnak, there was a very detailed work done in AIB to change all of its processes. I think they talked, the AIB people who came before you talked about the very extensive processes they went through. John Hyman did some work with them. Deloitte did a review of all the credit processes. And there was also, in that time, some change to their risk infrastructure. They were a very decentralised organisation prior to the Rusnak crisis. Post that, they put in certain decentralised risk and decentralised finance over time. And I think this was the genesis of that.
And you said that it took until 2007 to bring in that single information management architecture.
Actually, I'm not sure if that system was ever implemented. It was a huge process. They went through a huge change process. They had lots of consultants trying to develop that system, and I think it got overtaken by events, actually, is my recollection.
Without the implementation, then, of such a management system for information, I mean, could you be confident that you had a full picture?
Yeah, AIB had legacy systems that were inefficient, and it was harder to extract information, but they had data warehouses and other processes to gather information that we were able to use in conducting our audit. But it was a change process, and this was about streamlining their processes, reducing the number of people, and having a more automated process.
Okay. If we could turn then to page 9 in the same document, please. And you talked, Mr. Dobie, in your opening statement about the effective communication of risks between KPMG and AIB. And here we have, in relation to credit control and credit provisioning, an observation in the second paragraph on the left-hand side. During the course of our audit, we noted 11 significant provisions raised in December 2004, 9 of which were without the prior approval of the relevant credit committee. So is that an example of you as auditors catching something that AIB itself weren't aware of?
I'm not sure if AIB weren't aware of it, but there was a process in AIB where towards the end of the year they would process their loan loss provisions. We would have preferred that they did it throughout the year, but it was done towards the end of the year. There was a number of reasons why this was a practice we weren't particularly keen on. Firstly, as I've mentioned earlier, in a bank, the closer the relationship manager is to the loan, the greater the risk. So in this instance, and the way banks manage that is by having approval processes and credit committees. In this case, we would have liked to have seen where loans have been written off. I'm not saying there was a fraud, but there's an increased risk of fraud between the borrower and the lender, the relationship manager. And the bank's controls around that was to have all write-offs or provisions go through a credit committee. There was obviously, I would say, a lot of work done towards the end of this particular year. And credit provisions were processed. We would have been happy that they were processed timely, but we would have preferred if they'd gone through the credit provisioning process, the credit committee process. And one of the key, it's on the right-hand side of that page, one of the key matters, what's really important about when credit provisions are taken is that there's learnings from that loan loss. So if you advance a loan and then you have to take a provision against it, the most critical thing from the bank's perspective is that you learn the lessons from that loan. What was the problem? Why did this loan go bad? Was it the underwriting decision that was wrong? Was it the management of the loan over the period? Or whatever, right? So as it says, the main purpose of the markup is to analyse the cause of the loss and to learn from our loss experience in addition to confirm the appropriateness of the provision. So it was those two things that we were pointing out. So you're absolutely right. This was something that we were sort of picking up as improvements that we thought AIB could make.
And in the management response then on the right-hand side, that's AIB accepting your observation and recommendation?
Yes.
And is that then case closed?
No, the next year we would have looked at it again and we would have expected them to do it differently and to follow through on this recommendation. And in our management letters, when we raised management letter points, we'd raise them in 1 year. The following year, we'd look at if the matter came up again, we'd highlight it again. If there was an action from the previous year that wasn't dealt with, we'd capture that as an action that wasn't dealt with. And the chairman of the AIB Audit Committee at the time was very focused on items getting resolved on a timely basis. So one of his key metrics as chair of the Audit Committee would how many items did internal audit raise, how many items did external audit raise, and is management dealing with those matters on a timely basis? And that would have been, an appropriate control environment.
Thank you. I want to move into just another area then in relation to IAS 39.
Yep.
KPMG is an international company.
Yes, indeed.
KPMG operates in Spain.
We do.
Do you audit banks in Spain?
We do.
So one of the recommendations that came out of the NIBRC report on page 20 was he talked about the big auditing institutions having access to warning signs, and it was unexpected, he said, that the international experience that big auditing firms had was not used more. Would KPMG in Ireland have been aware that the Spanish banks and the Spanish regulator were not implementing IAS 39 fully?
Absolutely, we would have. I mean, we would get together as banking financial services partners regularly and discuss various best practice. One of the things, I'm not an expert in Spanish law, but it's different than Irish law. So when the EU IFRS regulation was brought into Irish law, it was brought in fully with no carve-outs. And we didn't have the option of having that carve-out that was available in Irish law. Sorry, that was available in Spanish law, and I have to say I don't understand all the details around Spanish law. I can say that the audit firms in Spain qualified the accounts of the Spanish banks to say that they were not in compliance with IFRS. Now, for AIB, given that it had accessed European capital markets and US capital markets, it wanted to apply IFRS and wanted that opinion from its auditors, and the market would have demanded its opinion from its auditors in relation to IFRS. The other thing I can say is while what was called dynamic provisioning was operated in Spain, it was only operated in relation to a small portion of its book, and it was there for a particular reason, which I think was to do with the holdings that Spanish banks held in Spanish companies. And what I can say as an observation is that the additional provisions that were set aside as a result of that were not sufficient to save the Spanish banks from the very significant issues that they faced.
Was the Spanish approach, or the carve-out as you described it, was that better practice?
Well, I have to take you back to the comment I made in my opening statements. If a bank thinks it needs more capital, it can hold capital. It can decide not to pay dividends. We had that discussion earlier on. It can decide to raise capital in the markets. If the regulator thinks there's greater risk in the banks than they would like to see, they can specify that greater capital should be held against those risks. So, IFRS accounting is only one small piece in the picture here. And the other thing I should say to you, when general provisions are set aside by banks, they're not necessarily a buffer against capital, because the capital adequacy rules under the CRD are such that those loan loss general provisions get added back to capital, so they're not available always as buffer. Now, it's technical, but they get added back to Tier 2 capital, but they do get added back to capital, and it's not necessarily a buffer against loss in that circumstance.
Thank you, Chair. Yeah, just then to conclude on that point, I mean, did you discuss this issue about what was happening in Spain, or the discussions that you'd had with AIB about this accounting standard? Did you discuss them with the financial regulator?
No, but we would have been aware. I mean, the regulators do various different things in different countries, and we would look at, in Canada they did something different, in Germany they do something different, and there is a college of regulators that gets together across the EU where they would discuss those matters, and I assume they were aware of what other regulators are doing. There's a forum for them to do that. But we wouldn't have discussed this with the regulator, and we wouldn't have viewed it as our role to set the capital for the banks. And that was the role of the regulator.
Okay. Thank you very much.